Okay, good evening, everyone. Today's date is on 27th of December 2023, and it's a very, very good, festive period. And congratulations, everyone. Due to a question someone asked me on my Telegram channel, I decided to do something very, real quick for him. I get him because definitely I don't usually look at the lower time frames if I have my entries right. I get him, except probably I'm waiting to, add more position. So what I usually do after I do my trade is I just leave that trade. I don't go to lower time frames anymore to see what is happening because I'll focus on the higher time frame from my monthly time frame, my weekly time frame, my daily time frame. The lowest time frame I go is the hourly time frame. As you can see, this is the monthly time frame of gold, and we have a very bullish engulfing candle in the month of September, October, which gave us a bullish signal that gold is continuing to be upside. I think that's the first one for you that you completed all your trainings and you know what you're doing. You should know where to start from. You start from your monthly time frame. Your RSI was with the tell you what is happening. Are you getting it in the bullish territory? And the monthly so gold is still massively bullish. I have a lot of confidence I use. Are you getting in determining what is happening in the market? But I want to flow the market, check what is happening, check how the market is building. You see me on the quality time trend because that's what the market actually does trend perfectly well. So this is a monthly chart of gold. Gold is bullish. Came back to let me leave the monthly, we call country the monthly, let's go to the weekly. On the weekly chart, this was a sorry, this was a resistance, not on support, on support again. So definitely you should be having things like these. I guess you should be having things. This was a previous support, sorry, previous resistance, not on support. Go and look for their day. Just go online, browse. What is just train yourself more. Are you getting? I don't want to turn this to a training session. I just want to do a quick rundown because of questions being asked. Are you getting? So this was it. So since we actually had this support and had this huge the way you saw a bullish engulfing on the monthly, it was a morning star, a huge morning star on the weekly, which was a massive bullish signal that if we can break out of this descending channel and we test 0.382, we will continue to the upside. Are you getting it? Are you getting it? So since we have that, what you should focus on is your entries. Focus on your entries, as you can see on the weekly. Focus on your entries and leave that market to run to wherever it's going to. And what let's first get the weekly target where it's going to, no matter how long it takes you to get there. Yes, no matter how long it takes to get there. Then I think I have series of rules. And what are the rules? If I can bring in my rules out, I guess it's this. I have series of rules. Number one, rules according to what's it the rules is that if a market must reverse, are you guessing it? If a market must reverse, it must what? Bring out a bullish reversal sharp pattern. That is what you went to the school, you want to cook and you don't know your ingredients. How will you cook a nice meal? Are you getting it? You said you are a chef or you are a cook and you don't know the ingredient or what you want to cook. You cook rubbish. So before you can trade, are you getting it? You need to know all your ingredients. That means your tools. Mention it. Are you getting it? So today we're going to use. Let's talk about Elliott. Wave. I don't want this to be serious, but we'll do a quick rundown. Let's talk about the theory of Elliott is that if I will have one, two, three, four, five legs, right? And rule number one, are you getting it? Is the first impulse. And what brings about what do you look at the leg number one? How if let's say you are having a bullish reversal, how much came in? Volume came in. Are you getting it? Was this sluggish or it was seriously bullish? Are you getting it? Did volume come in? Then look at again your candles. You were coming on a downtrend. That means the candles were like big before it started shrinking, and got to a level whereby what's it called? It got to a level whereby it changed and you started seeing green candles again. What do you do then? You should know without even looking at the chart. You should know that okay, it's like buyers are started coming in. So the rules of Elliott wave states that like one is an impulse. Are you getting like I just explained just now? Then two, the rules of an Elliott wave says that two must not like two must not go like one. Then aside from that, let's talk about like two. If truly a market wants to reverse back to the upside, are you getting it? Maybe other according to gold and maybe other assets. I have a rule which states that leg two should, that's where my Fibonacci comes in. Leg, leg two should at least stop at our Fibonacci retracement level. Maybe I'll just stop at retracement level of 0.382. If I get that, trust me, if a market is reversing from these sort of areas, let me come again. Okay, this is a weekly. If a market is actually breaking out from a bullish continuation, a bullish reversal pattern, I expect that market not to go below 0.382. So as long as that market is not going below 0.38, look at the let me show you so you understand how confident you can trade. Are you seeing it? Look at, let me expand this. The market did not actually go below 0.382. Are you getting it? As long as this market is not going below 0.382, are you getting it? And it's losing now, we're having a reversal or maybe on a lower time frame. Let me show you something else. As long as the market is respecting Elliott wave theory and using respecting our Fibonacci retracement levels, are you getting it? It broke out and even found support on a previous. Now let's go to the daily. Let's try to be clear. Are you getting it? This was a previous lower high. Now we broke it to the upside, changed character to the upside, broke out of our central descending channel, which is a bullish reversal chart, bullish continuation pattern, and came back and retested this previous resistance now on support. What do you expect as a trader? You should be happy and you put out all your confluences to. And what are the confluences? Let me come again. The confluences is that if truly this was a reversal, give me my green candles. Hold on. Give me my what? According to rules I just told you just now. Give me my green candles. You now start seeing BB green candles, BB green candles. I even broke out. So this is to me an impulse, even though this retracement has not happened, because we are on a downtrend. We've been trending from May all the way from May to the downside. Are you getting me? Forming lower lows, lower highs. Now we came back and broke the last lower high. That's a sign that the market wants to continue working to the upside. And it not just gave me that, it gave me my green candles, big green candles. When we're coming down, you're not seeing big green candles, right? It now brought back the vibe that okay, buyers have now withdrawn into the market. So since buyers are stepping into the market, I just want to see a breakout, number one, out of this descent triangle. I also want to do it. Also want to turn my previous resistance into support. So aside from that one, then I now bring in my Fibonacci tool. Fibonacci tool is the most accurate tool in the market. I'm coming, I'll show you inside what I'm telling you about right now. Fibonacci tool is the most interesting and most interesting tool inside the market. Since that happens, all I want to be waiting for is I'm waiting, I'm not even rushing. I'm waiting patiently for my 0.382 confluences to pick what? That was where we got this 1930 and 1932, 1945 entry, if you could remember. So the rules, okay, that's it. Yeah, sorry, hold on. Let me go back to, okay, let's go back to here. Now, that's leg two. Leg two should stop as Fibonacci retracement of 0.382. And for you to have now, there's a confidence that comes. Now, look at something. This is very important. Leg three in an Elliott wave is usually the longest. We have 1, 2, 3, 4, 5. One is an impulse, two is a retracement, 3 is an impulse, 4 is retracement, 5 is an impulse. Are you getting? So since 1 is an impulse, are you getting? 2 is a retracement. 3 is usually the longest in an Elliott wave theory. Go and browse Elliott wave. I don't know if I can have time to go and start doing that right now because I didn't really want this video to be very long. So since leg three cannot be shorter than any of leg one as an impulsive move of leg one or leg two. Leg three is usually the longest, if not the longest. My 5 might be long, 4, 3 might be, 1 might be long, but 1 is always shorter. It might be leg one. Leg one is always long because of giving us that bullish vibe that yes, I've retraced to break out of particular descending downtrend and broke getting so leg three is always long and most assets. Leg three is now we're cooking gold, follow up. Leg three is always longer. Are you getting it? So leg is always longer. Three is always longer. Are you getting it? It meaning that it cannot be shorter than leg one or 5 at the same time. So since we have this rule, now let me okay this and show you something else. Now just imagine that okay, this is a daily chart, a weekly chart of gold. Are you getting it? Now the most important thing you should know is that the most important thing you should know here is that if you have an impulsive move or your conferences break and we're stopping at 0.382, remember we stopped at 0.382 here. Are you getting it? Remember we stopped at 0.382 here. Trust me, once you can find an entry on these days, are you getting it? November 13th. Once you can find an entry on these days and you are having a higher time frame trend, are you getting it? This is a daily trend of the higher time frame right now, or the weekly trend. Trust me, if you can find an entry and you find a stop loss, leave that market to run until it must get there. I'll show you what is happening now. Good right now, probably on the lower time frame structures. This is really structures or weekly structures. Are you getting it? That means that what I mean by is that now employ your Fibonacci trend extension. Hold on. Are you getting it? Yes, where is that line? Here are the things I was writing just now. Okay, I'm coming. Okay. Leg three. Okay. See on leg three. The most important once it can the market has once the reversed. Huh? Once the market has reversed, you've shown your confidences that have reversed to trust me. Leg okay. Once the market has reversed to the upside, holding just 0.32, holding just 0.32 retracement. Trust me, very important to bring in your Fibonacci trend extension to leave that market to run the run Fib trend extension to until gets to 7% extension. It must get there. Are you getting it? Extension. It must get there. See, these are the confidence I have when I'm trading. Now, what am I trying to say? Are you getting it? Now, look at this market now. Let's go back to the daily and show you what I mean by that. If this market, bring your Fibonacci trend extension. If this market can actually change character to the upside, obeying all Elliott wave of Fibonacci rules, that's my strategy, and stops here, trust me, I take profit at 0.786. Are you there with me? I take profit at 0.786. It must get there. Now, previously, we got there, and the reason why we did this before and came down was because we wanted to take all these. Go and watch my videos. I talked about this. We wanted to take all these previous 2020, what's it called? Liquidities. Are you getting it? Hold on, I'm coming. Okay, a lot of people will say, but we've gotten to target. Are you getting it? What I'm explaining right now. A lot of people say, but we've gotten to target. Yes, we've gotten to target, but let me show you another instance again. Immediately we got to target. Are you getting it? We got to the first target. The target was 0.3. So this was when I was telling you that leave your trade to run from 1930 all the way to 2100 because we actually needed to take all these guys out from 2020. Are you getting it? After taking them out, we still need to come back and take this one out again. Now, let me give you, there's a lot of rules. It's just there. You just need the right knowledge, the right training, the right mentality. And whenever you get all this, you can even envision like from here now, 1974, we're taking it to 19, we've done over 1,000 pips now, just from December 13th till now. Now let me continue my explanation. My explanation is that because we leave that market, that's okay. Let me bring that and rules back again. Where are you? Let me go to the wiki. Yeah, this guy coming. Okay, I'm talking about this. Okay. Leave that market to run to 0.786, which we had our first trade from 1930 all the way to 2001, 2100, and even went as far as going to 2140. You can remember 2145. Now, after taking all those, that was leg number what? Leg number three. Now, number four. Leg number four is what? A retracement. Are you getting it? Leg number four is a retracement. Remember, two must not go below one. So two is a retracement also. Retracement, retrace. Yes. So two is a retracement. Then four is a retracement also. Also. So four means that what four means is that now in the rules of Elliott wave, one, two cannot go below one. Three is always the longest because that's what is going to show what's it called, the buyers the confidence that okay, we are going to go above. Are you getting it? And one of the longest. Then three always break a major structure. Three always have this in mind, always breaks a major. Three always breaks a major structure. Three will always break a major structure. If three does not break a structure, that means it's not an Elliott wave. Are you getting it? Then rule number four, four cannot go below one. Four cannot go below one. Meaning that, let me go back to the daily. What does that mean? If truly this is an Elliott wave, are you getting it? This is one. Let me bring the Elliott wave in. Is that where are you? Sorry, I'm coming. Let me look for that Elliott wave. Okay. This is one. This is one. This is two. Reverse at 0.382 correspond with a previous, give it like five conferences. Are you getting it? Then three always come above what? What's it called? Three come above comes to 0.786. I don't forget, sorry. I'm doing this also. I will definitely have some glitches. Three always comes what? Above, it must come to 0. It must reach 0.786. Must. It might pass, but it's a must that if you take a three and you, because of this confidence that the market is having around these areas, many confluences and confidence, are you getting? What does buyer do? Buyer tend to take this market to 0.786 and must break a major structure. Three came all the way to $2,145 because he wanted to take all these liquidities out. So immediately I knew that this was one and one was not going below one. Sorry, this was one and two was not going below one, also corresponding with a first confluence coming from a breaking out from an a descending channel, which is a bullish confirmation pattern, also corresponding and not going above below 0.382 retracement level, and also, just mention all the confluences there. I might not have all of them intact, but one, I guess it's descending channel one, then impulse breaking above changing character two, 0.382 retracement. I guess it. Then if you are trading on this particular day, just take your trade. Don't care how long, no matter how long it takes. It must definitely come and break a major what? A major structure, which was all this liquidity that it took. So immediately it took that liquidity. Are you guessing it? It came back down. And why did it come back down? I'll tell you. Meaning that 4 cannot go below 1. 4 came below 1, but it recovered with what? A morning star. Then 5, we always what? Either stop at 4 at 3 or go above 3. Are you getting? So since we have this, and this is not what textbook is showing you. If I remove all this chart, this is what textbook is showing you now. You don't know what textbook is showing you. 1, 2, 3, 4, 5. Are you getting? So the market must definitely come back and take this last week again. That's why you saw that when we got to 1973 and held, that was 4, and we did not go below 1. We recovered, even though we went below 1 a bit, we recovered it with a morning star. This was a morning star. I guess this was a huge money star. This was when I was talking about this huge money star. I guess that okay, since this is it, we are good to go. So if the daily time frame is the structure is telling you that we're coming back to take 2147, why then did you why are you so scared when you know that you have had this? I guess you have had this move. The first one, retracement, we didn't take it. We took 1930 to 2100. You know how many pips is that? Then four tried going below 1, but because of other things we applied again. And what is the rule we applied? The rule we applied was that we looked for a bullish continuation. Sorry, coming. We looked for a bullish, market structure because our market structure triggers. Are you getting me? We looked for a bullish structure, and what was that? Let me not take anything. Let me go to probably the 4-hourly or the 12 time frame. We look for a bullish structure and saw where the market actually switched and broke 1. I get it. When we got there, we saw what a we saw what a reversal sharp pattern. What was that? The what's it called? Um, a inverse head and inverse head and shoulders pattern. And what was that? Are you getting it? We saw an inverse head and shoulders pattern, which we had here. Are you getting it? And broke to the upside, retested again. I will continue going. If you measure all this, you see. So we saw that okay, this was where the whole market started from. So as long as we're not going below there, that's 1973, if I remember. As long as the market is not going below there, that means that we'll take our next trade and start entering the trade all the way back to what 2045 or even above that. Since Elliott 1, 2, 3, 4, 5 on the daily structure is telling us that we're coming back above here. Now, let me pause there. Let me pause there and try to conclude this video. Now, somebody was asking me that why was there massive sell? Why was there a massive sell from 2145 all the way to 1973 to see if we can not go below this last place that this market actually switched within the 1 and the 2 leg? Are you getting it? Why am I sure that we come back there? And why did we sell here? Now look, after whenever you see things like this happen, hmm? Whenever you see these things like this happen, you can see that from 2020, 2022, 2023, we had massive what liquidations happen. A lot of money left the market because a lot of stop losses are above all this place. A lot of stop losses are still above all this place. Both the ones that were left intentionally, both the ones that were not left intentionally. The market will definitely take it by 3 and sell to the downside. And how did I know that we'll come back to the downside to probably $2,000 to $93 area? We must not go below 1973. That's because the market will do something like called an ABC move to the downside. Are you getting it? Do something called an ABC move to the downside. Let me show you. Now, okay, I think I need to take this off first. Let me take it off and leave it down. Okay, probably move this. Now, look at this. When the market has taken what? When the market has taken a major high, a major liquidity, What does the market do next? What I expect the market to do next is to reverse with an ABC move to the ABC corrective move to the downside. Once I'm getting the ABC corrective move, are you getting it? I know that the market is ready again and not breaking a particular what major bullish structure. Because this was where the market actually did what started breaking to the upside. I even used in breaking this. This place is very important to the market. Very, very important because the market went to we tested and since then what happened? Since then, what happened? The market is now being an uptrend. The market broke out. We tested, came back, we tested. I get it. Let's say this line now. The market will continue doing what? Going to be upside. I get it. If you have all this knowledge intact, trust me, you will never make a mistake. You will never make a mistake in trading. I was waiting for this particular area not to break. As soon as it's not breaking, then I know that definitely if I took a trade from here, we are coming back here. So even though I'm taking profit in some areas, know that I'm only taking profit in those areas because I need money. I need to take profit. I need to pay myself. And probably you see that's why you see me sometimes taking more than 5, 10 trades at once in these sort of areas, finding entries, finding entries. Once I'm getting my entry, what do I do? I start entry by entry, adding more positions inside and let the market go run for me. I don't care anymore. So as it stands right now, since it's found support here, what happens next? I'm going back. So let me conclude. Let me see if I can conclude this video as from here. So from here right now, this was an ABC move to the downside because after taking those, it needs to, not just correct. It don't just need to correct the market to the downside. I guess it's not just an ABC correction. It needs to be liquidated a lot of people out of the market. So money needs to leave the market aggressively. That was why we had this. I guess so. From that, it has also given you. Hold on, I'm coming. From that, hold on, 1 minute. From that, it has also given you things that you can hold on to when you know the market is reversing. And what did it give you? It gave you this. Look at it. It gave you an ABC move, meaning that this was now what the last. This was now what the last support we had. Turned into resistance again. If I can go to probably lower time frame, show you. It turned into resistance, turned into resistance again. So immediately we are going above that. What happens next is telling you that if you are bought from here, leave the market to run until you take all these guys out. So this is another how many thousand pips again? How many pips from 2040 to 2142 is 1,000 pips again? Are you getting this? So even though you are taking, because you must take this last high out, which is one according to according to market structure and as a market structure trader. Are you getting it? Like I've explained before, if you are following me, it must take that guy out to complete. Are you getting it? The movement. It must take it out. So if I enter some kind of trades from this sort of areas, I leave my market to rust. I don't care. I'm just going to trade because I know that I have all the rules intact. Yes, so since it was an ABC correction to the downside, it must definitely and did not break this. It must from 1973, I get into 2145. You know how many thousand pips is that? You know how many thousand pips is that? Leave the market to run. Now, let's see. After that ABC correction moved to the downside, it needs to do that same thing it did on the daily for it to tell me that, okay, I'm not going to come down and, come and break 973 again or make you put you at risk. I'll give you a signal to show you that this structure is coming back to take 2,147 or 147 and even to 143 to 2,200 away again. How is going to show you? Now, this is a daily structure. You cannot sit here. Drop to the lower time frame structure, probably the 4 hourly chart. I usually use the 4 hourly chart to trend my weekly time frame. Drop to the 2 hourly chart. If you cannot see it clearly, you get it. That's why the lower time frame chart are there for you. But let's concentrate. Concentrate. Now, what was the last structure you had? This was the last lower. This was where the last area of value you had. Are you getting it? Where we had previous resistance. So immediately we are going above this resistance. I get this ABC. Immediately we are going above that resistance. Know that we are going up. But now let's apply those rules again of Elliott rules. Now, since it did that ABC to the downside, that was That's what a since that they did an ABC move to the downside, that is a correction which must not go below 1973. Remember, are you getting it? So this since this was a previous support, now to resistance, we need to go above that resistance. But this was a downtrend. ABC was a downtrend. It can continue trending to the downside. Are you getting it? Follow up. I might not be consistent, but follow up. This was an ABC move to the downside. It might just continue trending with breaking structure to the downside. But you are looking for something that's called a bullish vibe, right? Something that is telling you that if indeed the daily structure and the weekly structure is saying that since we're taking 2100 out first, we need to come back to a particular, previous, what's it called, four, which is one. Four, one must not go below. Sorry, let me use that. Let me refresh myself again. We had a rule that this is one. Are you getting it? So since that is one, four must not go below one. Are you getting it? So a lot of people have seen this Elliott wave that okay, since four is going below one, that means it's continuing trending to the downside. But instead, it gave us a bullish signal around this place. And what was the bullish signal? Are you getting it? That's why you have higher time frames there to show you. And what was the bullish signal? It gave us a morning star. The money star says that this place was a manipulation to the downside. Are you getting it? Since 14 below one, it was a manipulation to the downside. So as long as this green candle was closing 50% of this, and let me zoom that, show you how you recognize signals. Are you getting it? The market is always there telling you whatever it wants to do. The market is always there doing what, telling you whatever it wants to do. Now look at this is what a morning star. So most money start as long as money start and close 50% above this red candle, is still considered a money star. But instead, see what it did. Big money star even closed above and gave us a huge daily candle. That's enough to tell you that a lot of money came into the market that particular day that it touched. Are you getting it? Our previous word, where the market started trending from. So that's enough signal. And what's the second signal we talked about when we started this video? The second signal we talked about, and the most important signal is that as long as the market is not going below 0.382, are you getting it? Apply it again. As long as the market is not going below 0.382, another massive bullish move has started again. So take it that this is another now look at. And that was when I said everybody should buy from 2020, 2019 to 2016. The market was there, even guiding you with your figure 50 and 20 EMA. Immediately, what this on that signal I use again. Immediately 20 is crossing 50 to the upside, bullish. So the 50 and 20 EMA will be guiding you. Look at it, has been guiding you all this while. So as long as it's not going below it, it's not going below it. Are you getting it? It's on that signal to leave your trade, to do what's wrong, in case you are in your trade already. Let your 4 hourly chart, 20 or 50 EMA guide you. I said I didn't want this video to be long, but this is what I usually do. I just wanted to break something down to you. How if I've entered a trade, as long as I'm in this trade right now, my stop loss is under here. As long as we're not going below here, we're not going below. Are you getting it? The 20 EMA is guiding me. Until what in my trade, until it does what fail. Look at it, until it does what fail to the downside. Now look at the downside. Look at 973. You can see what the 20 and 50 EMA will do for you, guiding you until it broke. And when it wants to break, you will see a big candle that it will use you breaking it to tell you that okay, I've broken it. I want to go to the downside. Are you getting so a lot of confidences and things that gives you confidence in the market if you can learn them. If you can learn them. So let's continue. Now, what was the rule again that if truly this was a real buy, if truly this was a real buy, are you getting it? And the morning star, it gave you a morning star signal, are you getting it? And it was a reversal, and we must not go below 0.786. That's right. We must not go below where the market actually started from. Are you getting it? Let me take this one out. We must not go below 973 where the market actually started switching back to the upside from. Are you getting it? If you are in a trade in all these time areas, why would you even what was it called? Take profit when you know that you are definitely coming back to take this guy out again. Because what actually happened that this guy came or did an ABC was he used the electric in breaking, are you guys in breaking those 2,000, those liquidity zones. So since that is leg 3, leg 4 is coming back to take this guy, leg 5 is coming back to take that guy out. That means that this was leg 3, 4, are you getting it? Fake out, then 5 come to take this guy out to complete the whole, what's it called? Elliott wave movement. So whatever it does in the day, no matter the sluggishness, you have the market has already told you that I will go from all the way from 1973 $2,000 area back. That means that this was $2,000 area, right? That means that 2000 to 1973 was just to take a lot of people out that entered, aggressively because of an Elliott wave. Are you getting aggressive? So they needed to take them out first, manipulate them, take them out before we continue. So leg 5 states that it's either it goes above here or it goes equal, then maybe give us a double top. And this is just a week. There's no money, there's no sell orders there. It's just a week. It will definitely come and take it out. So if you have all this knowledge, are you getting it? What are you supposed to do? Leave your market to run. Leave your market to run. Stop scalping. So you really need the right knowledge. Now let's conclude. Let's conclude this part again. If truly on the daily time frame we saw that the market moved from 1930 to 2100, I guess because of what's it called? An Elliott wave movement, our house 0.382. What was the rule I just gave just? The rule is that we must definitely, since we're reversing from 0.38, which is 2020, 2016, we must do what? Get to 0.780. So let's bring our Fibonacci back and measure from here, right, to here, to here. It must get to 0.780. Now, this was where I took profit from. You can get go to that good. Here is that good. I'm coming. Look at this good. This was where I took first take profit, second take profit, and main TP, last take profit. And what did I use in taking this profit? I used this because I had a head and shoulders pattern here, and the accumulation fees to get to that take profit is what $2,094, which is definitely come to the psychological area of $2,100 and even go above it. So leave my market to I don't care about. That's why I don't go to the lower time frame to try and trade the lower time frame. Why I don't go to the lower time frame? Because definitely lower time frame should be 4 hourly chart from the 1 hourly chart. If you go to 3 hours, 2 hours, 1 hour, you're trying to find structures to show. They usually fail. They usually fail. Just back to here so that I can tell you why I took those TPs. I get it. Remember, I usually take first TP from 0.38 to which is 2060, from 2020 to 2060. I get it $2,060 to 2,400 pips, then $2,074, which we're taking right now, second TP. Now we're coming for third TP of $2,100, which will definitely do what? Get to $2,147. Might even break it. Why should I leave? Why should I, if I was in a trade from 2020, why should I be scared even though we do 500 pips from here? It's sell to the downside. I guess me. Because even though we sell to the downside to $2,040, definitely will continue what? Going back to the upside. Leave that market to run until it take it for you. Or pay yourself from 0.38, pay yourself from here, and leave the rest to run. No matter how long it takes, no business can give you what the market is giving you. No business, trust me, no business. This is what I just wanted to show you guys why I'm still leaving market to run. And when the market is even flowing, it gives you a lot. Are you getting it? It gives you a lot of confluences. Now let's go to probably the lower time, 1 hour time frame, and see how the market trends. What does the market use to trend? It uses patterns to trend. Now look at what is this coming? What is this? This is an ascending triangle. An ascending triangle is a bullish continuation pattern, and also you can even use other patterns like coming. Can we use other patterns like okay, this was what? A rally base that broke to the upside retested. I get a rally base what? Rally. So not all the time it must come back to the entry. It can just continue. It's a bullish structure. You can't tell it what to do. So right now it can just continue going straight ahead. I guess. But even aside from that, I guess you can even use the extension from here. Now, this was why I was saying that we're supposed to come back to the downside since we've gotten to 0.786 and 97. Are you getting from 0.38 to 2020? We've gotten to 0.786 and 1974. So it can continue trending. It's a bullish structure. So since that is that, a lot of people are banking on this particular, distribution that you had from 2020. This accumulation spring. Are you getting it? This is distribution, and the distribution was ending at 2078. So it can do whatever it wants to do and continue going up. And it still even had a smaller what? A smaller ascent triangle here. So the market has been doing what? Trending perfectly well. Perfectly well. So the only way right now that probably the market can switch and say, I don't want to trade. That's why they say, not trade again. A lot of people were entering sales from this 1974. And we're definitely when we get to 1974, we're coming down. Yes, we might come down, but this market is what trading perfectly well for you on the lower time. If you want on the lower time frame, since you're a lower time frame trader, I guess it's trading perfectly well for you. And the only way it can stop this is coming back and breaking below this kind of area. With testing and coming back down, probably doing an ABC to 1940, 1940, $39 area. But I don't trade the lower time frame. Are you getting it? I'm a swing trader. So I don't need to come to the lower time frame to try and find entries because I don't intend taking profit until we get to 2145. I sit down to pay myself from $2060 or $2074 and leave the rest to run. Are you getting it? So if you can trade this way and don't look at what the lower time frame is doing to you, are you getting it? You will definitely be formidable because before a scalper will gather 1,000, 2,000 pips, I get it for 5,000 pips, you've gathered about 10,000 pips, doing nothing, just waiting for your higher time frame structures to trade perfectly well for you. I get it. So for me, for now, no sentiment attached, no emotions. The market is still bullish. So until it brings a bearish, reversal sharp pattern, the market is still bullish. Let it run. After all, he said he wants to go to $2,150. So why should they even come down? Why should they sell? Are you getting it? I don't care. All my entries are from 1973, 2000. All my entries from 1973. Then when I saw this movement, and look at the market even showed you a sign that okay, I have reversed to I'm going back to 2150, 2147. It gave you a bullish vibe. Very big candles. Did you see when we're coming down? Did you see green candles when we're coming down? No. It gave you a bullish vibe. Sellers have to leave and come back to 0.382. Perfect Elliott wave. Now I've started another Elliott wave 1, 2. I guess now it's telling you that I've started another Elliott wave. And what is the Elliott wave? Let me just call it out. What is the Elliott wave it showed you here? Now let's bring Elliott wave in. 1, 2, 3, 4 cannot go below 1. So I'm expecting a 4. Remember, it must come, but you don't know where. So don't trade the retracement. Focus on the impulse. Since 4 cannot go below 1, like we did at 9. Since 4 cannot go below 1. I start 1, 1, 2, 3, 4 cannot go below 1. So if I've taken profit at 974, I don't know where it's going to happen, where the retracement is going to happen. But it's going to show me with this ascending triangle that is building. Once it breaks below any ascending triangle that we've seen right now, that's retraced, it will do an ABC correction to the downside. Are you getting it? Then 5. Now, this will be an ABC correction to the downside because you need a very huge momentum, probably on Friday. Today is what? Wednesday. Today is Wednesday. So tomorrow it can continue going up. So those Friday sales, those Thursday ending and Friday sales, you might use in doing a 3 to 4 correction back to 1945, $1939 area. I get it. You have to have all your facts right. Remember, this was the last area on the higher time frame structures we had. So we might even come back to all these areas. Are you getting it? Remember what you did from 2000 to 1973. Are you getting it? We might come back to all these areas. Are you getting it? We might use between 1939 to 1945 as manipulation, like you did in 1973. Remember that a lot of people were thinking that, okay, this one. So definitely from 1973 to 2007 was manipulation. Again, so we might come in between these places, and to answer your question now, you that was asking, we might come back into these places, four might not go below one, but we can come as manipulation or stop here and continue going to the upside. And it might not, trust me, it might not come back again, it might just continue expanding to the upside. Why? Because so hold on, sorry, I'm coming. It might just continue. So mostly once I see this kind of very bullish structures, are you getting it? I don't sell because I don't know where the reversal is going to come. I might only take a leg down, but most of the time, what if it just continue expanding and take me out? Are you getting it? What if it just continue expanding and take me out? I'm out of the market. Are you getting it? Because I'm selling now, lose more than 200 pips because I want to, be greedy to sell when I've made over 10,000 pips within the last 2 months. When I've made over what 10,000 pips within the last 2 months, why should I be selling from 2080 right now to 20? What's it called? We see how oil, the oil is trending perfectly well also. So why should I sell? Are you guessing it? Why should I sell because I'm looking for 400 pips when I can actually just take my profit, go and enjoy myself and wait? Are you guessing it? So this is what I have for you. Are you guessing? If you watch this video, just watch it over and over again. You understand how this market does actually work. Because a lot of people are saying that, okay, from here to 2074, they've set their trades already without waiting for this particular day to get here and see who can find a reversal. If we're looking for a reversal right now, we have to be on 15-minute chart. It needs to give us something from the 15-minute chart that, okay, now, is this truly an evening star on the 15-minute chart? Are you getting it? You should know, it will tell you. Are you getting it? If this is an evening star, you can take a trade from 220.80, put your stop loss 20.83, and let the market do what? Straight for you. When this was a reversal, that means we are coming all the way back down to 2072. Are you getting it? And since we are not breaking it, we are not continuing and breaking to the downside, we change character to the downside. We enter from here and sell that market to the downside. So I've answered your question for you. I guess if you have any further questions, come on the Telegram channel and ask me. I get it. Take care and bye for now. Bye. Bye.